All right, today we are opening a really fascinating file that just hit our desk.
Oh, yeah.
Yeah, and this isn't some academic research or anything like that. This is a high-stakes, market-moving analysis.
Okay.
The title is NBIS Breakout Alert. Do not miss this sold-out AI opportunity.
Wow. So not pulling any punches with that headline.
Not at all. And you can see the urgency, the really aggressive claims, which is exactly why we wanted to do it. Focus squarely on NBIS Group, ticker NBIS.
Right.
And it details why a lot of financial analysts believe this company is having a huge, technical and fundamental breakout happening at the same time.
Okay.
So our mission is pretty clear. We need to cut through all the sensational language and really unpack the core intelligence behind this very, very bullish claim.
And what we're looking at here is a high-conviction investment thesis. I mean, the whole argument is based on one single reality.
Which is?
That the biggest constraint in the entire global AI economy right now is physical infrastructure. It's the bottleneck.
So this report is basically positioning NBIS as the answer to that problem.
Exactly. As a potential runaway leader in AI cloud services. Now, we're not here to endorse the stock, obviously. Our job is to dig in and contextualize the facts that are giving this claim so much weight. What's the reality under the surface?
Okay, so let's start right there with that immediate reality, the technical trigger that set off this alert in the first place.
The chart move.
The chart move. The stock didn't just nudge up. The analysis in this report is, it's explosive. We're talking a massive 9.60% gain.
In one session.
In a single trading session. It closed at $107.33 after hitting a high of almost $109. I mean, that kind of movement makes everyone stop and look.
For sure.
But the report is really careful to frame this as more than just a one-day pump.
It has to be, right?
The analysts make a pretty compelling technical claim. They said the stock had spent weeks consolidating in the $90 range. Now, for anyone who follows charts, you know that consolidation can mean accumulation.
Investors are buying in quietly.
Exactly. But this move, they argue, wasn't accumulation. It was ripping through resistance.
And that phrase is so key, ripping through resistance.
Why is that?
Well, when big institutions are buying, they form a kind of ceiling. For NBIS, that was probably the big $100 psychological barrier, but also just the top of that $90 range.
Okay.
When you blast through that ceiling with a move of almost 10%, it signals the dynamic has totally changed. It's not quiet buying anymore, it's urgency.
So the technicals are telling a story.
They are. And what's really fascinating is how the report uses that momentum to prove its fundamental story. The analysis basically says this sharp move is proving that Wall Street is finally waking up.
Because it takes big money to move a stock like that.
It takes serious capital. This isn't just retail traders. It suggests that large institutions have done their homework on the company and now they're moving in fast. The momentum is like a physical sign of their conviction.
And that conviction has to be rooted in the company's actual strategy, which I think brings us to the most important transformation described in this analysis.
The pivot.
The strategic pivot. The report argues that NBIS Group is, fundamentally a different company now. It's not a general tech holding company anymore.
Right.
Its new identity, according to this material, is a pure play AI cloud infrastructure giant. That phrase, pure play, is so important. It suggests they've gotten rid of everything that isn't directly related to selling AI compute.
And that's the right question to ask, right? Because pure play sounds great to investors, but it's often an overstatement.
So is it true here?
Well, the depth of their commitment, as the analysis details it, suggests they are operating as if they are pure play.
What does that mean in practical terms?
It means they are building and operating these massive dedicated GPU clusters. We're talking about the computational backbone, the literal hardware engines you need to train and run every advanced AI model on the planet, from ChatGPT to Gemini.
So they're not trying to build the next killer AI app. They're building the factory.
Precisely. And this is why the infrastructure play is seen as so valuable right now. The report uses that classic gold rush metaphor.
Selling the shovels.
NBIS is selling the shovels for the gold rush. Think about it. Companies like OpenAI and Google, they're all fighting to find the gold, the best AI models. That's super high risk, high reward.
Right.
NBIS, on the other hand, is providing the one thing that every single one of them needs to even be in the race.
The compute power.
The compute power. The real bottleneck right now isn't brilliant ideas, it's access to the massive, expensive capacity you need to test those ideas. So by focusing just on infrastructure, NBIS doesn't have to bet on which AI app wins. They get paid no matter what.
It's like a utility company, but for the AI sector.
It's a utility play masquerading as a high-growth tech stock, yeah.
That context really sets the stage for the most sensational claim in the whole report, the one that really got our attention.
The sold-out claim.
The sold-out capacity. The analysis claims demand is so intense that NBIS's GPU capacity is, quote, effectively sold out.
Insane demand.
Insane demand, driven by developers and big companies. They say they simply can't make the shovels fast enough.
Which, if true, is a huge deal.
It is. It suggests a genuine infrastructure crisis where supply just can't keep up. But what does effectively sold out really mean here? Are we talking about a backlog or something more?
It implies long-term, high-commitment contracts. Think multi-year agreements that lock in all that recurring revenue.
Got it.
And when a company gets to that point, the only way to make more money is to expand massively and rapidly.
Which leads directly to the scale that they're talking about in the report.
The staggering scale. The NBIS plan is incredibly aggressive. They're aiming to scale up to 2.5 gigawatts of capacity by 2026.
2.5 gigawatts. That's a number so big it's almost meaningless. How do you even put that in perspective?
Well, this is where the source material does a really good job of making it relatable for you. It specifies that 2.5 gigawatts is enough power to run a small country.
Wow.
Dedicated entirely to AI.
Dedicated entirely to AI. That's incredible.
It is, and that analogy does two things. First, it makes that insane demand claim feel very real. No company commits that kind of capital unless the demand is basically guaranteed.
And second,
it highlights the enormous barrier to entry. This isn't a small startup. This is a multi-billion-dollar logistical operation. The sheer commitment to 2.5 gigawatts becomes a core part of the bull case itself.
And that kind of capital commitment has to show up in the financials, right? Which brings us to the hyper-growth numbers they use to justify the high valuation.
Yeah, if you're sold out, the revenue should be exploding.
And the report says it is. They're citing year-over-year revenue explosions of over 350%.
350%.
That's clearly what they mean by hyper-growth mode. It shows that the pivot to infrastructure is paying off and fast. But, I mean, how sustainable is a 350% jump?
That is the critical question. A number like that is often driven by a big new batch of GPUs coming online and getting monetized all at once. The sustainability is tied directly to that 2.5 gigawatt goal.
So if they keep building, the growth continues.
They should sustain very high growth. Maybe not 350% forever, but very high. It's proofs of concept, the demand is real, and they can close the big deals.
Okay, so let's put some numbers on the valuation right now. The stock closed at $107.33. That puts its market cap, even after this big jump, at around $27 billion.
And it's been higher before. The report mentions a historical peak of $141.
Right, but now we have to talk about the really aggressive price targets. The analysis points to strong buy ratings, with some targets as high as $220.
That is a dramatic number. If you do the math, from $107 to $220, that represents
100% upside.
Effectively a 100% upside, which shows maximum conviction.
So how on earth do they justify that kind of projection, a $27 billion company doubling?
It comes down to comparative valuation. The report's final argument is that the $27 billion market cap might actually be cheap.
Cheap. Compared to what?
Compared to peers like Palantir or massive hyperscalers. Now, those are very different companies, right?
Very different. Palantir is mostly software and services.
Correct. But the logic is that while Palantir has high margins, NBIS provides the indispensable foundational layer. Their revenue is incredibly sticky and predictable.
So the argument is, compared to Amazon or Microsoft Azure, which have these huge, diffuse business models, NBIS offers a cleaner, higher growth way to invest in the single biggest choke point in AI.
Exactly that. The key variable is that recurring revenue. If NBIS actually hits their target of generating billions in recurring revenue by next year, then today's $27 billion valuation will start to look very undervalued.
It's a utility with hypergrowth potential.
A very rare and very lucrative combination if they pull it off.
Okay, so if we bring all this together, the technical breakout, the pivot to pure play infrastructure, the sold-out capacity, the hypergrowth, the report's conclusion is, well, it's undeniably bullish.
It is. They're basically signaling that the window to buy the dip is closing fast.
And for anyone watching the charts, they pinpoint one critical level.
The $110 mark. The analysis says if the stock can break decisively above $110 and hold it, then they are off to the races. It would be the chart confirming the whole fundamental story.
That was a phenomenal deep dive. Let's just quickly synthesize the core arguments of this bull case for you. It really rests on four interlocked pillars. First, that clean pivot to pure play AI infrastructure. Second, the astonishing claim that its GPU capacity is effectively sold out. Third, the massive 2.5 gigawatt scaling plan, which is its own moat.
Right.
And finally, the financial proof, that revenue growth of over 350%.
And if you just zoom out for a second, regardless of what you think about this one stock, this report is a perfect snapshot of the current AI arms race.
How so?
It just underscores this fundamental lesson. All the amazing theoretical advances in AI are now being held back by physical, real-world things. Access to compute power, the literal hardware and critically the electricity. That is the Pew bottleneck. It's what's driving all this investment. The physical shovels are everything.
Which leaves us with the final and I think pretty provocative thought. The source material says NBIS needs 2.5 gigawatts, the power of a small country, just for its own goals by 2026. If just one provider needs that much dedicated energy to build these AI engines, what does that suggest about the total global energy and infrastructure that's going to be required to sustain this entire AI industry?
It's a huge new consumer on the world stage.
A massive new consumer of global resources. And that logistical footprint, that demand for power and land, is going to fundamentally shape the next decade. Definitely something to think about as you follow this story.